Welcome back to We Are Cosmic, the channel where we break down what is actually happening in global finance and digital assets, without hype, without promises, and without noise. Today's discussion is not about price targets or speculation. It's about infrastructure, power, and long-term financial direction. The central question we are exploring is this: is Ripple, and by extension XRP's underlying network, quietly positioning itself as a core layer of the European financial system? At first glance, that idea may sound extreme. But when you step away from headlines and look at policy behavior, regulatory timelines, and institutional coordination, a very different picture begins to form. One that most retail participants never see because it doesn't unfold on social media. It unfolds in closed meetings, technical pilots, and regulatory frameworks. A former City of London banker, known publicly as Lord Belgrave, claims that there is internal knowledge circulating in European banking and policy circles that strongly suggests Ripple's technology is far more embedded in future planning than public statements would indicate. These claims are not presented as confirmed facts, but they align with something seasoned market observers understand well. Public narratives often lag far behind internal positioning. The European Union has a complex policy environment. Over the years, it has faced documented governance issues, lobbying controversies, and regulatory contradictions. These are not opinions, they are public record. But what matters more than the flaws themselves is how systems behave during moments of transition. Historically, when policymakers criticize emerging technologies publicly while simultaneously studying, testing, or preparing them privately, it usually signals that change is already underway. This pattern is not unique to crypto. It has occurred before with the internet, electronic trading, and even mobile banking. Blockchain technology appears to be following the same path. For more than a decade, distributed ledger technology has been developed mostly outside public attention. While mainstream media focused on volatility and scandals, financial institutions and central banks focused on something else entirely: settlement efficiency, liquidity fragmentation, and cross-border friction. These are structural problems that legacy systems struggle to solve. Now ask yourself a simple question. How often do you hear local news discussing a new financial operating system? How often do mainstream outlets explain how payment rails, settlement layers, and liquidity networks are being rebuilt? Almost never. And yet, the work has been ongoing for years. Ripple, its leadership, and its technology stack have consistently appeared around these efforts, not as a consumer brand, but as infrastructure. That distinction matters. Infrastructure does not need public approval to function. It needs regulatory alignment, institutional integration, and interoperability. Years ago, Ripple leadership openly discussed a strategy that sounded almost theoretical at the time. Connect one bank per major region, and you don't just link two banks, you link entire payment networks. One bank in the US connected to one bank in Europe means access to the entire SEPA system. That is not speculation. That is how network architecture works. If that concept succeeds even partially, the implications are large. It means fewer intermediaries, faster reconciliation, and systems that talk to one another instead of operating in silos. Europe, in particular, has been vocal about solving fragmentation in payments, especially for remittances, cross-border trade, and instant settlement. This brings us to why 2026 keeps appearing in official speeches, pilot documentation, and central bank roadmaps. The European Central Bank and national central banks have openly discussed hybrid systems where regulated blockchain platforms interoperate with central bank money. These are not retail experiments. These are wholesale settlement trials involving real institutions and real value. This series will walk through those developments step by step. We will look at regulatory signals, institutional pilots, interoperability frameworks, and where Ripple fits into that structure. No assumptions, no predictions, just alignment of data points. To understand why Ripple keeps appearing in European financial discussions, we need to focus on how institutions think, not how headlines are written. Banks and regulators do not adopt new systems all at once. They move in layers, testing first, integrating second, and scaling last. What looks slow on the surface often hides steady progress underneath. Years ago, Ripple leadership described a strategy that many people overlooked at the time. The idea was not mass adoption overnight. The idea was to secure one bank in each major financial region. One in the United States, one in Europe, one in Asia. At first glance, that sounds modest. In reality, it creates a multiplier effect. When a single bank connects to a major payment network like SEPA in Europe or ACH in the United States, it does not operate in isolation. That one connection effectively opens corridors to thousands of other institutions already on that network. This is how payment infrastructure scales. It grows sideways, not upward. This is especially important in Europe, where the financial system is not centralized into a single banking entity. Europe operates through interconnected systems such as SEPA, TIPS, Target 2, and other settlement platforms. These systems work well within their own domains, but they struggle when value needs to move across borders, platforms, and asset types. Legacy correspondent banking relies on multiple intermediaries, delayed settlement, and fragmented liquidity pools. That is not a technical flaw. It is a historical design limitation. Modern financial systems are now trying to solve that constraint. This is where Ripple's positioning becomes relevant. Ripple has consistently framed its technology as an alternative to correspondent banking, not as a consumer payment app. That framing aligns perfectly with institutional needs. Banks care about settlement finality, capital efficiency, and regulatory clarity, not trends. When Ripple announced that regulated U.S. banks had joined its network years ago, the announcement itself was not the most important part. The important part was what it signaled: regulatory comfort. Banks do not pilot systems unless regulators are aware and involved. These conversations do not happen in public. They happen quietly, often months or years before any announcement. Fast forward to Europe, and a similar pattern appears. Ripple's presence starts to show up around central bank discussions, interoperability pilots, and wholesale settlement experiments. These are not retail use cases. These are foundation layer conversations. Central banks have openly stated that the immediate future of finance will not be purely blockchain-based or purely legacy-based. Instead, it will be hybrid. Traditional systems will remain, but they will interoperate with distributed ledger platforms. That interoperability is the key word. Interoperability solves one of the biggest problems in global finance: fragmentation. Right now, payment systems are siloed. Even popular digital platforms cannot talk to one another directly. That is why sending value across borders can still take days. European policymakers have repeatedly emphasized the need to link payment systems, make remittances faster, and reduce cost and complexity. These goals are not ideological, they are operational. When you overlay this with Ripple's technology stack, a clear alignment emerges. Ripple is not trying to replace central banks or overthrow banking systems. It is positioning itself as a connective layer, a bridge between systems that already exist but cannot efficiently communicate. This also explains why so much development appears to happen behind the scenes. Infrastructure does not need public enthusiasm. It needs stability, compliance, and reliability. By the time infrastructure becomes visible to the public, most of the decisions have already been made. As we move forward in this breakdown, the timeline becomes critical. Mentions of 2025 and 2026 are not random. They align with documented pilot results, regulatory frameworks like MiCA, and speeches from central banking officials discussing production-ready systems. Now that we understand Ripple's strategy in Europe, let's dive into real examples of how XRP and Ripple are being integrated with banks and payment systems. Ripple's approach has always been practical. Test with pilot programs, demonstrate reliability, and then scale. In the US, they started with banks like CBW in Kansas and Cross River Bank in New Jersey, carefully introducing new technology while keeping regulatory and operational stability in mind. These pilots weren't just experiments, they were proof of concept, showing that distributed ledger technology can act as a real alternative to traditional correspondent banking. The logic behind this strategy is simple but powerful. By connecting one bank in the US to one bank in Europe, Ripple effectively links all the banks on both networks. This creates a network effect where additional banks can join seamlessly without having to build individual connections with every other bank. Imagine it like a web. One connection in the right place spreads value and connectivity across the entire system. This is where XRP comes in as the bridge currency, enabling smooth, instant, and cost-effective transfers across borders. In Europe, Ripple has been actively engaging with key countries. For example, in Luxembourg, they secured a license to operate under EU regulations, which opens doors to serving banks and institutions directly. Similarly, in Greece, the Bank of Greece has been participating in pilot projects linking crypto assets with central bank money. These pilots involve hundreds of transactions with billions of euros, testing the interoperability of blockchain-based settlements with existing financial infrastructure. The results have been promising, showing that XRP and Ripple can reduce transaction costs, improve liquidity management, and provide near-instant settlement. Another important aspect is interoperability with European systems. Europe has multiple payment networks like SEPA and TIPS, which traditionally operate independently. Ripple's API framework is already compliant with ISO 2022, the same standard used by PSD2 regulations in the EU. This means Ripple can plug into the existing infrastructure without requiring major changes to the legacy systems. Essentially, it creates a bridge between old and new, allowing the benefits of blockchain to enhance traditional financial networks. Ripple's engagement also includes meetings with regulators and the European Banking Authority. In early 2025, private meetings discussed RLUSD issuance and the progress of MiCA-compliant digital assets. These discussions highlight that Ripple is not only offering technology, but also aligning with regulatory frameworks. This alignment is crucial for mass adoption, as banks and financial institutions need to operate under clear rules while exploring innovative solutions. The role of XRP in these processes cannot be overstated. As a digital settlement asset, XRP can move value quickly and efficiently between banks, replacing slower traditional systems that rely on multiple intermediaries. For example, a transfer that might take 2 to 3 days through correspondent banking can potentially be completed in seconds using XRP. This is particularly important for cross-border payments, where delays and high fees have been long-standing problems. Let's look at how the European Central Bank, ECB, and other authorities are interacting with Ripple and XRP. Europe has been preparing for digital transformation for years, but much of it has been behind the scenes. Reports reveal that the ECB has been working on systems to integrate digital assets with central bank money. This includes pilot programs and frameworks that test the interoperability of blockchain platforms with traditional financial infrastructure. Ripple, with its XRP ledger, has become a key partner in this process. In September 2025, the Bank of Greece revealed plans for a 2026 launch of an interoperable digital target DT system, linking crypto assets with central bank money. The goal is to create a hybrid system where digital assets and traditional money work together seamlessly. Ripple's technology, particularly XRP, is a strong candidate for this because it can act as a programmable settlement instrument. This means it can facilitate instant transactions while adhering to regulatory standards. Essentially, XRP could become the digital bridge that connects legacy systems with new blockchain-based settlement networks. Ripple has also been involved in meetings with multiple European financial authorities. The European Banking Authority, EBA, documented private meetings with Ripple in early 2025, focusing on MiCA regulation compliance and RLUSD issuance. These discussions show that Ripple is being taken seriously as a partner, not just a technology provider. Their work aligns with the EU's push for regulated, secure, and interoperable digital finance. These meetings are significant because they indicate that Ripple's solutions are being considered for real-world adoption, beyond testing and pilot phases. A major challenge in Europe has been fragmented payment systems. Historically, banks in different countries used siloed systems that couldn't communicate efficiently. This created inefficiencies, delays, and high transaction costs. Ripple's integration into systems like SEPA, Single Euro Payments Area, and TIPS, Target Instant Payment System, addresses this problem. XRP can act as a bridge currency, allowing instant settlement between banks and reducing dependency on legacy processes. For instance, a transfer that previously took multiple intermediaries and days to complete could now happen in seconds with near zero friction. The ECB and other authorities are also exploring euro-backed stablecoins as programmable settlement instruments. Ripple's institutional approach makes it a suitable candidate for such initiatives. Instead of retail-focused stablecoins, these euro-backed digital assets are designed for institutional utility with full collateralization and visibility for central banks. The idea is simple but powerful. Create a digital euro that works seamlessly with XRP and Ripple's ledger, enabling fast, transparent, and secure cross-border settlements. Interlinking payment systems is another key focus. Christine Lagarde and other ECB officials have emphasized the importance of connecting systems like TIPS and TARGET2. Ripple's technology allows for this integration, making it possible for retail, institutional, and cross-border payments to flow efficiently across Europe. The potential impact is enormous. Migrant workers sending remittances, businesses managing international transactions, and banks optimizing liquidity could all benefit from faster, cheaper, and more transparent operations. Finally, Ripple's European strategy is designed for scale and long-term adoption. They are not only building technical solutions, but also establishing partnerships and compliance frameworks that prepare Europe for a digital-first financial system. By 2026, XRP could play a central role as a settlement asset for euro-denominated transactions, bridging traditional banking and blockchain-based infrastructure. Now that we've explored Ripple's European strategy and ECB integration, let's widen the lens to see how Ripple is connecting financial systems across the globe. Ripple's approach is not limited to Europe or the US. It's part of a larger plan to create a worldwide payment network. The strategy is simple but highly effective. Connect key banks in each major region, and the network effect will naturally expand, linking thousands of institutions across continents. The global strategy begins with regional hubs. Ripple targets banks in North America, Europe, Asia, the Middle East, Africa, and South America. By connecting one bank in each hub to another bank in a different region, Ripple can instantly link entire banking networks. This is what they call the multiplier effect. For example, a bank in the US connecting to a bank in Europe can effectively create an instant bridge for hundreds of other banks that are part of those networks. XRP is the bridge currency enabling these cross-border transactions, allowing funds to move instantly and transparently. Ripple's presence is growing in key regions like Asia and the Middle East. In countries like Japan, they've partnered with SBI, one of the largest financial groups, to explore blockchain-based settlements. Similarly, in the Middle East, Ripple has expanded operations in Dubai and Bahrain. In each case, the goal is the same: establish connections between regional banks, integrate with local payment systems, and demonstrate XRP's efficiency as a settlement asset. These pilot projects are not theoretical. They are active operational tests that prove Ripple's technology works at scale. A critical component of Ripple's global plan is interoperability. Payment systems around the world are fragmented, with many banks relying on outdated processes that cannot communicate with each other. Ripple's Ledger and XRP solve this problem by acting as a universal bridge. Whether it's transferring funds between a European bank and a US bank, or sending remittances from Asia to South America, XRP enables near-instant settlement, transparency, and lower costs. This is particularly important for remittances, international trade, and corporate transactions, where efficiency directly affects profitability and access to funds. Ripple's global strategy also aligns with regulatory engagement. Across regions, they meet with central banks, regulators, and financial authorities to ensure compliance. In Europe, this includes MiCA regulations and euro-backed digital assets. In Asia, it involves working with Japan's financial authorities, and in the US, they coordinate with banks under federal regulations. This careful approach allows Ripple to operate legally while demonstrating the viability of blockchain-based settlements in regulated environments. Another key focus is market making and liquidity provision. Ripple works with institutional market makers to ensure that XRP can facilitate smooth currency exchanges. By connecting banks and market makers, Ripple enables efficient cross-currency transactions. For instance, a European bank can instantly settle funds with a US bank in dollars or euros without relying on slow correspondent banking channels. XRP is the digital bridge that makes this possible. Finally, Ripple's global vision is about building a unified financial infrastructure. The goal is not to replace traditional banks, but to modernize the system, making cross-border payments faster, cheaper, and more transparent. By linking continents, currencies, and financial institutions, Ripple positions XRP as the universal settlement asset. Once this network is fully operational, it could reshape the way the world moves money, creating a digital-first, interoperable, and efficient global financial system. As we wrap up, let's look at the broader implications of Ripple and XRP for Europe, the world, and the future of finance. From what we've seen, Ripple is not just building a product, they are helping design a new financial infrastructure. By connecting banks, integrating with regulators, and leveraging XRP as a bridge currency, Ripple is positioning itself at the center of a global digital payment network. This is a long-term vision that goes beyond short-term market fluctuations. It's about creating a system that is faster, more efficient, and more transparent than the legacy systems we use today. In Europe, the groundwork is already being laid. Through partnerships, licensing, and compliance with EU regulations such as MiCA, Ripple is preparing for widespread adoption. Banks can integrate Ripple's technology into their existing systems, including SEPA and TIPS, to settle payments instantly across borders. The introduction of euro-backed digital assets and programmable settlement instruments could revolutionize institutional banking in Europe, enabling faster cross-border transfers, reduced costs, and improved liquidity management. Essentially, XRP could act as the digital backbone of the European financial system. But the vision doesn't stop at Europe. Ripple's global approach is about creating a networked financial world. By connecting banks in North America, Europe, Asia, the Middle East, Africa, and South America, Ripple can create a truly interconnected system. XRP serves as the bridge currency in the system, allowing transactions to occur across different currencies and payment networks in seconds rather than days. This global connectivity has major implications for businesses, governments, and individuals alike, including faster remittances, more efficient trade, and reduced reliance on slow, expensive correspondent banking. One of the most important aspects of Ripple's strategy is regulatory alignment. Ripple works closely with central banks and financial authorities worldwide to ensure their solutions comply with local regulations. From the EU to Japan, Ripple is presenting its technology as a compliant, secure, and scalable solution for digital finance. By doing this, they are not only gaining legitimacy, but also building the foundation for mass adoption. Regulatory engagement is key because financial institutions will only adopt technology that is safe, secure, and legally recognized. Ripple is also solving a key problem of the old financial system: fragmentation. Legacy systems are siloed and often cannot communicate efficiently. This creates delays, extra costs, and inefficiencies in cross-border transactions. Ripple and XRP bridge these gaps, allowing banks, payment processors, and even individuals to move funds smoothly across previously disconnected networks. This isn't just a technological improvement, it's a transformation in how the world handles money. Looking ahead, Ripple's strategy suggests that XRP could play a central role in the next-generation financial system. By acting as a bridge currency, supporting euro-backed digital assets, and connecting banks worldwide, XRP could become a key tool for global finance. It's about more than just speed or cost. It's about creating a unified, transparent, and interoperable infrastructure that serves banks, businesses, and individuals across the world. In conclusion, Ripple's work in Europe and globally is a sign of a larger trend: the integration of blockchain technology into mainstream finance. While the process is gradual and requires regulatory coordination, the roadmap is clear. Ripple is establishing itself as a central player, and XRP is positioned as a bridge for instant, efficient, and transparent global payments. The future of finance is digital, interconnected, and fast, and Ripple and XRP are at the heart of that transformation.